Hello students, welcome. This is Dr. Mercado speaking. I am going to be your instructor for Accounting 1304 Introduction to Accounting 2. Okay? Every week I'm going to be recording short lectures covering some of your homework problems to assist you in understanding your homework. Okay? I'm not going to cover every single problem and I'm not going to go over the content in the book. Okay, it is the student's responsibility to read your textbook, to read the chapter assigned before you begin attempting your homework problems. My lectures are going to be more problem solving oriented to provide guidance to complete your homework. Okay, so this week we're going to be covering chapter 10, which deals with accounting for sales and cash receipts. This particular lecture is going to cover how to complete exercise 10.5a. And we are using the textbook College Accounting 23rd edition, chapters 1 through 27. Okay. So, before we start with the actual problem, when we took Accounting 1303, which was the first part of this course, most of our assignments focused on a service company. Now, starting from chapter 10 forward, we are transitioning from a service company to a merchandising company. So we are going to be introduced to new accounts. Okay. Now, depending on the instructor that you had last semester or whenever you took Accounting 1303, you might have already covered chapter 10 before. I know I did when I was teaching Accounting 1303. Why? Because before we were not teaching Accounting 1304. Okay, this is something new that we started doing this semester. So we are transitioning to having the first and second part of Introduction to Accounting. So it might be a repeat if you've taken Accounting 1303 in the past in future semesters, but it'll serve as a refresher. Okay. So what are we dealing with here? Okay, we are going to be dealing with a merchandising company. Okay. So basically, a merchandising business purchases merchandise such as clothing, furniture, or computers, or anything else, furniture, cars, anything. And they sell that merchandise to customers. Okay, it's like when you go to Target. You go to Target and you see a whole bunch of stuff. You go and you buy detergent, you go buy toilet paper, clothes, anything that you need is at Target. Well, Target didn't manufacture all that. A whole bunch of merchandisers put their stuff in Target shelves and then we go and we purchase from Target. Okay? So that is a merchandising business, okay? And that is what we're going to be focusing on today. Okay? Now, in this new chapter, we are being introduced to 5 new accounts. We have sales, sales tax payable, sales returns and allowances, customer refunds payable, and sales discounts. Now, your textbook covers all of these. They provide you with definitions. They provide you with all of the information that you need. Now, the textbook also provides you with figure 10.7, which I have illustrated here. And I love this figure because it basically tells you, okay, if I'm going to be doing an entry to sales tax payable, what's the normal balance of the account? Well, if it's a payable, I know that I need to credit it, okay? Either sales tax payable or customer refunds payable, the normal balance is the credit. If I'm going to record to sales, it's going to be a credit. If I'm going to record to sales returns and allowances, it's going to be a debit. And if I'm going to record to sales discount, it's going to be a debit. Okay? So it provides you a mapping or, just very useful information for when you're recording your entries. Okay? Now, this is coming straight out of your book. It's explaining to you the different accounts. These are 4 of the accounts that we're going to be using the most. Okay? So the sales account is basically a revenue account used to record sales of merchandise. Every time merchandise is sold, we're going to record it in the sales account. And this is only the amount of the sale. Okay? So if you buy, let's say, a pair of jeans for $50, you're going to go ahead and you're going to credit, okay, the amount of the sale under the account sales. So sales will always be credited, and this is where you enter the selling price of the merchandise sold. We also have to pay taxes. You go to Target or Walmart and you have to pay the amount of the merchandise plus the taxes. The taxes do not belong to Target or to Walmart. Those belong to different taxing entities. What these companies do is they collect the taxes from the customer, and then at the end of a certain period, they pay out those taxes to the different taxing entities. Okay? So The second account that we have is the sales tax payable account, and it says here that most states require retailers to collect sales tax on sales to final customers. Okay, when sales tax is imposed on merchandise sold, a separate account for sales tax payable is kept. Okay, this is a payable, so that means it's a liability account. Whenever we have a liability account, we credit it. Okay. So a credit balance in the account indicates the amount owed to the taxing authority for the taxes collected. So whenever we have sales tax and we collect it, you're going to enter the tax imposed on the sales as a credit. Okay. Now we debit the sales tax payable when we make a payment to the different taxing authorities, or when we have to make an adjustment because the customer returns something. So let's say I buy a pair of jeans today. Tomorrow I go and I return them to Target. I paid $50 for those jeans. Okay. Target's going to give me back the $50 that I paid for the jeans plus the taxes that I paid on it. So if there is a return being done, then we would have to debit the account to take the money out of the payable to give it to the customer. Okay. We also have sales returns and allowances. And it's basically a contra revenue account which has a debit balance, and it is deducted from the related revenue account. So sales returns and allowances are debited to this account. Okay, so whenever you have a sales return and allowance, it's going to have a normal balance of a debit. And then we have our sales discounts account. Some businesses offer cash discounts to encourage prompt payment. Most of the sales are done on account. We want to make sure that we collect that money, and we collect that money fast. So to encourage that we collect that money fast, they offer cash discounts, and they say, well, if you pay me within 10 days, I'll give you a 2% discount. Okay? So it is very important. Prompt collection of your receivables is super important, and offering cash discounts is a good way to ensure that the customers pay you back timely. Okay? So whenever we have a sales discounts, the normal balance is a debit. Okay, like I said, all of this information is on your book. Okay, now we're going to go to the actual problem that I'm going to be working on today. This is exercise 10.5a, and it deals with journalizing sales, sales returns and allowances, and cash receipts. Okay, so we have a little bit of everything going on in this problem. I really like this problem because it gives you a view of the different types of transactions merchandising companies have. Okay, let me see. So let's get started with exercise 10.5a. Okay, so it says prepare journal entries for the following transactions. And then we're given 2, 4, 6 transactions that are happening. Okay, so we're going to go one at a time, and we're going to go in date order. So we're going to start off with a transaction dated August the 4th. Okay. So it says here that you sold merchandise on account. So what does that mean? You sold it, but they haven't paid you yet. That's what it means. So you sold merchandise to S. Miller for $320 plus a sales tax of 4% with a 210 and 30 cash discount terms. Okay, so before we move forward, what does all of this say? Okay, so it says that I sold merchandise on account, which means Miller agreed to pay me later for $320. Miller also has to pay a 4% tax on that merchandise that he purchased. Okay, now we as a company said, hey Miller, if you pay me within 10 days, 210, okay, if you pay me within 10 days, you'll get a 2% discount. So whenever you see these terms, the first number represents the discount amount, 2%. The second number represents by when do I have to pay? By 10 days. From the date of the sale, you have 10 days to pay me. If you pay me within 10 days, I'll give you a 2% discount. If you don't want to take advantage of that offer, then it's net 30, which means you're going to have to pay me in 30 days. Okay? So those are the discount terms. Not all customers will receive those discount offers, but some of them will. Okay? So let's start recording. So the first thing that we have to say here is that the merchandise, how did they pay for the merchandise? Well, they haven't paid for the merchandise. They purchased it on account. So that means that S. Miller owes me money. And when someone owes you money, what account do we use? Okay? So when someone owes you money, we set up a receivable. Okay, we have an accounts receivable, And we have to keep track of the receivable separately by customer. So this is the receivable for Miller, okay? And I'm just going to put the title for now, and I'll fill in the amounts later, okay? So what is happening? Well, we made a sale. We sold merchandise to Miller, okay? So we're going to have an account to sales. Now, if you look at your diagram over here, whenever you have sales, it's going to be a credit, okay? So right now we'll go to that. So sales would be a credit, okay? And then it says here that we have to impose a 4% tax on the purchase. So we have another account called sales tax payable. So those are the three accounts that we're going to be using, okay? Sales tax payable for the tax portion, and then the accounts receivable is the total amount that Miller owes us. That includes the sale amount and the taxes, okay? So let's start off with what the information that we know. It says here that you sold merchandise to Miller for $320, okay? So how much is my sale for? Well, your sale is going to represent how much did Miller purchase in merchandise. Well, Miller purchased $320 of merchandise. Okay, awesome. Now Miller has to pay taxes. Okay, so $320, and the tax rate is 4%. That gives me $12.80 of taxes. Okay, and let me change this. There we go. Okay, so Miller owes me $320 of merchandise. Miller owes me $12.80 for taxes. So how much should I set up the receivable in the book for? Well, I'm going to set up the receivable for the $320 and the $12.80. I'm going to add those together, and that gives me $332.80. Okay. When Miller pays me, he has to pay me the $320 of the merchandise, and he also has to pay me $12.80 of the tax. So I'm going to set up a receivable for $332.80. That is how much money I am going to collect from Miller. Okay. And then we're going to put a description. We made a credit sale. Okay, so now I've got some T accounts down here. Okay, I'm a very visual learner, so I want to make sure that I'm understanding what's going on. So I've got two T accounts set up, one's for Miller and one's for Kurtek. Okay, the first thing we have is accounts receivable of $332.80. Okay, so I'm going to put that there. That way I can keep track of my receivable. That is how much I need to collect. The accounts receivable is a very important account. It's money that is being owed to us, and we have to collect it. Okay. So then what happened? On the 6th, you sold merchandise on account now to a different customer. This is Kurtek for $210 plus a tax of 4%. Now, if you notice, this customer does not have any discount terms. So no discount is being offered. They just have to pay me the $210, and that's it. Okay. So this is happening August the 6th. Okay. So on August the 6th, once again, and it's on account as well, we're going to use the same three accounts. Okay, so I'm just going to copy and paste them. Every time you have a sale on account, it's going to be those three accounts in that specific order. Okay, so for August the 6th, how much did Kurtek purchase in actual merchandise? Well, he purchased $210. Okay, how about the taxes? Okay, so it's $210 times 4% tax. That's going to give me $8.40. Okay. So how much does Miller owe me? Well, Miller owes me the $210 plus the $8.40. Miller owes me $218.40. Okay. So I'm going to go over here to my T account for Kurtek, and Kurtek owes me $218.40. Accounts receivable is an asset account, and its normal balance is a debit. Okay, so that happened on the 6th. Okay, then on the 10th, Miller returned merchandise purchased on August the 4th for $20 plus sales tax for credit. Okay, so at this point, Miller has still not paid us, but he's already, they're sending back a return of $20. Okay, this is happening August the 10th. Okay, so, August the 10th. What happened here? A return was done. So here we're going to introduce a new account called Sales Returns and Allowances. Okay. How much is being returned? We are returning $20 of merchandise. It says right there, $20. Okay. Along with the $20 of merchandise, what else are we returning? Okay. When this transaction happened on the 4th, what did Miller pay? Well, Miller paid the merchandise and Miller paid the taxes. So now I need to refund Miller the portion of the taxes that he had originally paid on those $20. So now I'm going to have my sales tax payable, okay? And if you look at your sales tax payable account right here, it says here that you debit the account if there's an adjustment of tax on merchandise returned by customers, which is what's happening right now, okay? So your sales tax payable, okay, is we have a return of $20. I'm going to multiply it by 4%. That's my tax rate. That means that I have to return 80 cents in taxes back. Okay. Okay. Now, what am I going to do with this refund? Okay. Well, if the customer would have paid you cash, then you give them cash back. But that's not the case here. Miller owes us money. So we set up a receivable. So what we're going to do is we're going to offset this return to the receivable. That way, when the customer pays his balance, he owes the correct amount, the updated balance, which is the original purchase less the return. Okay? So here, I'm going to go ahead and I'm going to have my accounts receivable. S. Miller. Okay? And I'm going to give Miller credit for the merchandise being returned, which is the $20, and the 80 cents of taxes. Okay? So here we have the return. Accounts receivable is being credited $20.80. Okay? So this is the purchase. Let me put it over here. This is the purchase, and this is the return. Oh, sorry. This is for Miller, not for Kurtek. Okay? So P is for purchase. Sorry about that. P is for purchase, and then R is going to be for return, okay? That way we know. So P is for the purchase. We have a purchase there, and then we're going to have a return, okay? So I'm going to put here, P equals purchase, R equals, oh, sorry about that, R equals return, okay? That way we know. Okay, so going back to August the 10th, we have a return. Accounts receivable is being credited $20.80, okay? So that happened on August the 10th, okay? Then on the 13th, it says that Miller paid the balance due on her account. Well, how much does Miller owe? Well, Miller purchased $332.80, and then they returned $20.80. So what Miller owes me as of today is $312. That is how much Miller owes me. So Miller is going to pay the balance due. Okay, that is happening on August the 13th. Okay, let me just, we made a credit sale there. That way we have our descriptions. We should have a description for every transaction. That way we know what is going on in each transaction. So the first two were made a credit sale. The third transaction was a return merchandise. The fourth transaction is Miller paid the balance due on her account. Okay. Okay. So how does Miller pay? Miller owes money. So then Miller owes me money. What am I going to receive from Miller? Well, there's only one way to pay, and that is with cash. Okay, they're liquidating their balance, so we are receiving cash. Okay. Now it's important to go back to August 4th. What did August 4th said? It says that if you pay me within 10 days, you'll get a 2% discount. I bought the merchandise on the 4th. I'm paying it on the 13th. Is that less than 10 days? Yes. So that means that I have to discount a 2% of what I owe because I'm paying beforehand, or I'm paying within their discount terms of 10 days. So I have to take into account my sales discounts. Okay? And of course, we have to clear our accounts receivable. Okay? We want to remove the accounts receivable from the books so we can show that the balance has been paid. Okay? So those are the three accounts that are happening here. Okay? So, before we start, the first thing that we should do is we should figure out how much did Miller owe us. Well, we've done the calculation here, and according to my calculation, Miller owed us $312. Okay? $312. That is what we need to clear. Okay? So, if you notice, my balance is on the debit side. Okay? So, what do I need to do to clear my receivable? Then I would have to credit my receivable. Okay, and the amount that's going to be credited is $312, okay, from right here. Okay. Now we need to figure out the sales discount. Okay, now the sales discount is going to be only taking into account the sales transactions. Okay, so what happened on the 4th, I had a sale of $320. Then what happened on the 10th, we had a return of $20. So the actual sales were for $300. Okay? Now that I know the amount of my sales, I am going to multiply it by my 2% discount. Okay? So that means that I am getting a $6 discount for paying within 10 days. Okay? And the amount of your discount would be a debit. You enter your cash discounts as a debit. Okay? Okay. Now the question is, how much cash are we going to receive? Well, I know Miller owed me $312, and I know that he's getting a discount of $6. So that means I'm going to receive $306 in cash. Now, this is standard. Remember from your Accounting 1303 course, you should know this. Debits must always equal credits. Okay, when you're journalizing, debits must equal credits for every transaction. Okay, so it's very important that you maintain a balance. Okay, so that happened on the 13th. Now let's go to what happened on the 15th. It says that Kurtek returns the merchandise purchased on August the 6th, $40 plus the sales tax for credit. So that is happening on August the 15th. Okay, so August the 15th, we made a return. Okay, so when we make a return, we're going to be using these three accounts. Okay, we're going to debit sales returns and allowances. We're going to go ahead and debit sales tax payable, and then we're going to credit our accounts receivable. Okay, so the amount of your return is $40. They returned $40 of merchandise. Okay. Now, on top of the $40 that we're going to give them, we also have to refund them the taxes. So I'm going to multiply the 40, and my tax rate is 4%. So that means I have to refund them $1.60 for their taxes. Okay. And, okay, let's $1.60. Yes, we're doing a return on the 15th. Okay. And then what we're going to do is we're going to give credit because this transaction, the original transaction that happened on August the 6th, they purchased it on account. So that means we're going to give them credit on their account. Okay. And we're going to give them credit for the $40 of the merchandise plus the $1.60 for the taxes. So I'm going to go ahead and I'm going to return and do an entry to my accounts receivable for $41.60. Okay. Okay, so we return some merchandise. And then I can put that here that we had a return of 4160. Okay. Okay, so that happened on the 15th. On the 20th, Curtec paid the balance due. Well, how much does Curtec owe us? Well, they purchased 218.40 and then they returned 41.60. So let me see what that gives us. Okay, so that means that Curtec owed me 176.80. Okay, so it's very important these T accounts help us understand what is owed. Well, we purchased 218.40, we returned 41.60, so that means we owe 176.80. Okay, so we are getting ready. Now, whenever we receive, in this particular, it says that Curtec is paying the balance due on the account. Okay, we have, this is happening on the 20th. Okay, what did we receive from Curtec? If Curtec is paying the balance due. Well, usually if someone's paying us, that is in cash, in money. Okay, so if we notice Curtec on the transaction for the 6th did not have any discount applied or offered to him. So Curtec is not going to have any discounts provided. So we can just proceed to saying, okay, well, how much cash are we receiving from Curtec? Okay, well, we're receiving 176.80. Okay, that is the balance that we have in our books. Okay, and then we also have to clear our accounts receivable. For Curtec. Okay, so according to my T account, we owe or Curtec owes us. We have a receivable from Curtec for 176.80. Okay, so if Curtec is paying us, then does Curtec owe us this money no more? No, we need to zero this account out. Well, how are we going to do it? We're going to go ahead. The original balance is a debit, so I can go ahead and record the payment of that money owed. I'm going to go ahead and I'm going to credit the account. Okay, right now it has a debit balance. How do I zero it out? By doing the opposite, which is credit the account. Okay, and then here we have receive cash on account. Okay, so these are the transactions that are happening. Just be very careful when you're doing your journal entries. Don't forget your tax. And whenever a refund is made, also don't forget your tax, because tax was paid when the merchandise was purchased. So if you pay taxes on it, those taxes have to be refunded as well. Okay, so this is an example of a variety of journalizing transactions for sales, sales returns and allowances, and cash receipts. Okay, a wealth of information and examples are provided in your electronic book. Please, if you have any questions on this problem or any of your homework problems, do not hesitate to reach out to me. And that is basically it for the end of this problem. I'll be recording an additional supplemental lecture for another problem in another lecture. But this is the final completed problem for exercise 10.5a. Okay, thank you very much, and until next time.